Okay, traders, welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, January 23rd. Great to be with you guys this morning. Mark, Peter, Pete, Ziad, Christopher's in the house. Great to see you all here. Dee, good morning to you as well. So, really picking and choosing our entries here. Things are still rangy, to say the least. Near-term price action has just been like straight lateral on some of these dollar crosses. So, as these ranges contract, again, that should be something we're looking forward to. Periods of really contracted volatility precede surges in vol, so we're certainly looking for things to start to pick up. We have Davos going on, obviously, the World Economic Forum. We have the BOJ and the ECB. More importantly, towards the end of the week, get those updated personal core expenditure numbers and U.S. fourth quarter GDP, which is, again, expected to tail off a little bit to 3% from the 3.3% or 3.2% we got the previous quarter. So should be an interesting read and definitely should chart some nice price action into the dollar crosses heading into the end of the week. Where we are now is tricky, and I can't, stress that enough. I was talking, me and Jamie were just going back and forth yesterday. Look, the dollar index is coming into a very interesting spot. It's been reluctant to really do much. Here's what the daily chart has looked like as we sit on slope support. The broader trend, we talked about this yesterday, the broader trend still remains down, weighted to the downside. And while we're looking for further dollar weakness alongside that analog that Jamie's been following as well, near term, we have to clear this range. So really been picking and choosing. Today, for example, when you come into the U.S. markets, you have Aussie's the worst performer on the session. That was the one that we highlighted last night. And that's sort of, I got suckered back into this again on the short side. So, hoping that this continues to move lower. And the yen is the strongest performer versus the dollar. So you're seeing a little bit of a haven ditch. Equity markets on the global side still are in the black for the day, so it's not like we have a turnover in broader risk sentiment, but some interesting stuff happening in price action that we want to just be very mindful of. So on the docket for today, obviously DXY real quick, we'll cover that. Aussie from yesterday, pound Aussie, finally clearing the monthly opening range, which took place right above support. So that puts us in a little bit more of an also Aussie bearish stance, and certainly if Aussie pulls back a little bit more, should get pound Aussie up into that initial target zone that we're looking for. We haven't reached it just yet. Pound CAD, on the other hand, that stretched to the upside after breaking the monthly opening range a few weeks back. That is at also near-term resistance. We highlighted that yesterday, giving us a little pullback here in pound CAD. Updates on the euro dollar, pound dollar. Peter had a question. Mr. Green, I got you for pound Kiwi. We'll take a look at that. Dollar yen, just want to note that's still holding the range above near-term support, as well as dollar Swiss, which is completely lateral. Crude prices also with a shaky break here. Still think you fizzle out, but hasn't necessarily given us the break of support just yet. And dollar CAD, I think we noted, also sitting at support. We'll take a look at what that looks like today. All right, if you have any questions or trade setups I didn't note, feel free, as always, at any time throughout the session to throw them on the message board. I'll see a couple of new names in here, guys, today. So a quick reminder that there's a camera button in the top of your GoToWebinar screen. If you need to take a snapshot of any of the charts you see presented, feel free to do so at any time. Okay. All right, so DXY. Here's what we look like early in the week. And this was the zone that we were talking about in yesterday's webinar on Daily Effects. If you had joined us, here's what the DXY looks like on the weekly. And this is kind of where I get a little bit concerned about continuing to favor broader dollar weakness from this level. If we were to get some sort of near-term corrective rebound, I'm all over it. But I'd be concerned to jump into a short from here. Now, the 2009 high comes in just a little bit lower, 89.62, and that was sort of confluence region last week. Moving forward into this week, it's a very precarious situation. We talked about this yesterday, the fact that we've completed 5 weeks down. The last few instances we've seen 5 weeks down have offered a little bit of a near-term recovery, before all is said and done. Not all of them were of this magnitude, but certainly the risk is there. So Broadly, downtrend support, and that's still the theme moving into the open, or moving deeper into this week. Here's what the daily chart looks like. Okay, there's that 50 line. You haven't been able to close below it. Basic slope support from last year, that's been resistance. Last year's low, that's been resistance. So you have a very clear-cut 100 pip range still of 90.91. It's the same exact thing I said yesterday. And we have to wait to see a near-term break of that range. Now, the near-term picture looks like this. And it looks a little bit heavier here, just based on the momentum signature. Unable to even clear 50 on the way up for a rebound. So certainly there's no imminent shift in the momentum profile that would suggest, oh, we need to be looking for the rebound. But at the same time, even if it slugs a little bit lower, 89.90, I'd be very hesitant to jump into short exposure from here. Now, again, that's not a carte blanche bias against all the dollar crosses, but certainly looking at this independently on its own merits, even if we get another stab low, I'd be very cautious. On the flip side of that, or just as a caveat, remember what we always say, the downside break of a descending pattern will be typically the sharpest part of the move. So indeed, if we were to clear below 89.60, that level on the daily chart, 89.55, then you could see a real acceleration to the downside in the dollar before any type of major recovery. So the risk is there. The closer we get to support, again, ideally you get some sort of corrective rebound to get short. If not, guys, don't get caught chasing this. Very precarious situation. So that's the DXY. Any questions on that before we move on? A little bit in a precarious spot here, but on whole, it hasn't even made a break of the weekly opening range. Now, the Aussie is the pair I favored in the face of playing that possibility for the dollar strength. And that was based on where this thing has been trading on a lot of different venues. If you take this to the weekly charts, we didn't quite make it, but the high day close, the high week close for last year was right here at 80.54. Okay, we didn't quite make it there. Again, this is coming off of the back of a 6-week advance. That extreme in price, and it puts things vulnerable. So even heading into the start of this week, even last week as we were approaching this region, you guys know we were jumped into a short on this one as well. Eventually we took it at break even. I did get an email from a subscriber yesterday about the Aussie position that was taken on the swing side of trade. Guys, make sure you're always keeping your eye on the real-time squawk SB squawk, because if we ever exit a position or we ever set the stop to break even, which is what happened on that Aussie trade, we'll post it here. As a quick reminder for anyone who's new, if you haven't done so already, make sure that you fill out this form on the homepage and then submit a request to follow through Twitter. You can actually also set up SMS alerts so that whenever we tweet a change to a trade, that always comes with the hashtag trade with it. And it'll give you an alert. So quick reminder there for any new subscribers. But for Aussie, the risk remains, again, for a little bit of a near-term pullback here is what we were looking at yesterday. Okay, didn't quite make it into that, but certainly it looked precarious. Daily chart didn't have much structure to the advance. Again, the high day close 80.54 was sort of the ideal entry. But last night, it looked like it was turning over pretty heavy. Okay, we've been getting this ongoing momentum divergence. We've been talking about that as price action continues to make higher highs, higher high, higher high, series of lower highs. Suggests that the momentum profile looks tired. Once we started to break down a little bit yesterday, I just threw a stop against last Friday's high, and I'm trying to get as close as I can to that slope support. Now, shaved a little off at the opening range lows for the week, 79.78, but we really need to get below that to at least mark a near-term break of this channel. Whoops. So we'll see how this pans out into the U.S. trade session. But so far, as it stands right now, if we were to close at these levels, we've made an outside day reversal off resistance, which would be initially sort of a kick for possible pullback. Same thing with momentum. As long as momentum, if it closes today above 30, that's not helpful in trying to at least stoke some sort of near-term recovery. That being said, might have jumped the gun on this one a little bit. Again, if we get stopped at break even on it, so be it. But I'm still thinking exhaustion here in Aussie near term. The break below channel support, again, that comes in like 79.40s, I think I wrote yesterday, is what would get this thing going, in my humble opinion. And here's what it looked like yesterday. So we haven't quite made it into slope support, and if it starts making it through the weekly open, which we're testing right now, certainly again that wouldn't be supportive of the idea of a near-term breakdown. So be nimble. If we get failure again towards the weekly range highs, look at near-term price. It might be another opportunity to get in, but super nimble, guys. Again, trading these turns are always tricky, so super nimble. Here's what the 60-minute looks like, by the way. We'll see how this pans out. Any questions on Aussie? So no change to any of those levels from last night on that. Next up on tap is Pound Oz. So I went into a little bit over into a cross on Pound on the Aussie cross to see if I could find anything that could help further, what's the word? Oh, add a little more conviction or a little more color to what's going on with Aussie. Pound seems to be just ripping. We'll get into pound dollar in a moment. I'm still thinking that's vulnerable, but certainly it was still the strongest of the bunch of the lot. Here's what Pound Oz look like. Or here's what it looks like now, Pound Oz. Okay, and here's what we looked like last night. So the main thing that I just wanted to highlight here is this is a trade that we looked at a few weeks ago, I guess at this point. And the only thing that we highlighted was, look, it set a very clear-cut, well-defined monthly opening range right above a critical support. Right above a critical support. Huge pivot in price. Last year's open. 100-day moving average, you name it. Swing highs, swing lows, it's all stacked up right there. We came right into it, and we validated a very clean monthly opening range. So we were looking for this close or a break of this range heading into the end of the month. A topside break, 75.60 into 76. Basically, this 40 pip region here is sort of your first daily target. Now, obviously, on the intraday charts, we had a little bit closer of some topside levels, but that's the level I still think that you should be aiming for here on this pound off stretch. So here's what it looks like now, or here's what it looked like last night. I guess I'll show you the weekly. First of all, that 50 line that you're looking at right there in the weekly, price never closed below it. And we talked about just a second ago, the wick stretched exactly into the 2017 open and rebounded right off it. So that puts you on a little bit more of an upslope play just on the weekly standpoint. Daily chart, again, basic and objective. These are my favorite plays because it has nothing to do with opinion. No one's swaying this. We're not hearing news breakouts or anything out of either of these countries right now that should necessarily be charging anything major in the fundamentals. So it's a pure, sheer price point play. Break of the monthly opening range should have us looking for a late month high. It's not going to be a straight shot. But again, daily resistance, I still think 75, 60, 76 is an attainable and decent target to the upside. Intraday chart looked like this last night. Again, we just caught the initial weekly opening range break. There's your monthly opening range break. Here's the 2018 open. Boom, resistance, tag of support, resistance. We tacked this trend line on. You don't want to put too much emphasis on it because it's only a 2-point touch. But the upper parallel would highlight the 618 extension, and guess what? That's 76.50. Same thing that we were just looking at on the daily chart, 76.60. So either way you slice it, I think it's a decent setup. You want to stay constructive while above 73.68, in my humble opinion. A really decent pivot in price, clear resistance, break, acceleration, instant support, break, acceleration. A little messy here. Couldn't get much closes above it, and that converges on that basic slope support. So we'll leave that for now as sort of my near-term bullish invalidation, 73.68. Looking to buy pullbacks if you're not already in. If you are already in, 75.47 would be something I would take a little bit off, quarter off the trade, if not half, to be quite frank with you, because I don't really want to get too aggressive on sterling longs from this point. But definitely your stops at break even. Next upside target would be that 76.50 level, and again, from the daily chart, that turns out to be a pretty big region. Any questions on pound Aussie? So another way where Aussie weakness has manifested itself, and despite the fact, like I said, sterling versus US dollar, I still do think is vulnerable up here. But this is just an objective break of a monthly opening range. I don't want to argue that. It's a clear cut just break in price. So I still think you got a little bit more room to the upside. And by the way, that 50% retracement is just the decline. So just a 50 move, recover half, would still take you up into 75.47. Let's see if we get it. All right. Moving right along, that is pound Aussie, number 3 from last night. Number 4 and final piece from last night was pound CAD. So it's very interesting because the pound crosses are sort of all doing their various things, but I think price action on their own merits has been pretty clear. So Aussie, we were looking vulnerable for weakness. Pound Aussie, we were looking for this to stretch a little bit higher. That's Aussie weakness. Pound CAD was vulnerable yesterday because you're coming right into near-term resistance. Here's the weekly chart. The daily chart looks like. You had a long-term 618 retracement, which caught the close highs, and that was also the December open, 74.33, 74.32. The high day close, okay, this dates a ways back to the previous year. I think it was 2016, came in at 74.06. And just that close high from December, from the November stretch. Now, pound CAD was a clear, and this is another real nice example of how we use opening ranges to our benefit. So you can see here the opening range is happening way late in the month. We're on the 22nd of the month, and that gives us a stretch looking for a late month high. Here, the opening range happened much earlier. In pound CAD, the opening range break happened right here on the 12th of the month. Here's your monthly open. You set a low. You test the monthly open resistance. You fail. You test the monthly open resistance. You fail the second day. Third attempt gives you a well-defined close well above, looking for that late month high, but we're stretching into resistance. So for that daily chart, by the way, the 618 retracement that you're looking at here is off the decline, or excuse me, this is actually off the ascent of the lows that we made in 2013. So we're still trading within that same range. And you can see that the 88.6 caught the lows, caught the lows, caught the lows. The 618 has been a clear pivot in price. And again, that converges on those swing highs from November and December for that matter. So right off the bat, beautiful monthly opening range break. It's late in the month. Price is testing resistance, momentum. I wouldn't necessarily say we've broken resistance, but testing 70 here near term. Now, this one has been even more of a radical stretch. And I think I noted that yesterday in the report, if I'm not mistaken. 11 days up. I had to look that up, guys. The last occurrence was in 2006. Now, when that happened, it was a pretty brief interruption, and we did actually resume to a fresh high, which eventually capped out and saw a massive pullback. But my point being is, this doesn't necessarily refute the uptrend. I think this is still in a strong uptrend. I just think near term, the risk is for a little bit of a sideways to downside action while below this region. Pretty big, pretty big. And 11 days up is no joke. That is no joke. So the daily chart, no change. That was the level that we highlighted yesterday. Watch this resistance. Intraday chart, there's that 618 again. And it seems like we're trading within this near-term channel. Again, only a 2-point touch, so I don't have all that much conviction on it. But the lower parallel converges on a basic 764 retracement, which converges on the objective weekly opening range lows. So trying to keep things as objective based on price action as possible, basically put support at 73. That's your near-term bullish invalidation level. A breach higher, you're basically looking for a stretch into like 75.30s. This upper parallel here. Let me show you the intraday chart. Right here. And that's just based on slope. So immediately you're still in overbought condition. Like I said, bring this into a near-term chart. It has actually returned from overbought condition and actually showed a little bit more of a bearish stance heading into that region. Even on the 60, you got some divergence into that last high. So, the exhaustion trade necessarily hasn't manifested itself yet, but largely speaking, on a pullback, the play for me is either to get long off somewhere near slope support, or if we breach the highs, look for the pullback to buy against the weekly opening range high, looking for a strong shoot higher. If we get through channel resistance, the Brexit close comes in at 77.33, 77.32. So, little bit of a stretched play. Again, trading these turns, very precarious. I don't want anyone to get comfortable with that. And if you aren't a near-term trader, we're looking for this pullback to get a swing for the long side. Okay, but for me, still kind of hoping that we get some sort of near-term exhaustion. All right, questions on pound Oz. That's or pound CAD rather. That's the last update from last night's setup. Go to the one before, or the previous night's setup. Before I jump into some of these Aussie crosses, I do want to just cover pound dollar, and then Peter, your question on pound Kiwi. So with all the pound crosses that we've covered, right? Pound Aussie, still a little bit more upside room. Pound CAD at resistance. Here's what pound dollar looks like. So on the weekly basis, what I'll be focused on, let me just put it this way, is what the weekly close does. If the weekly close manages to get above 39.52, which is a basic 38.2 retracement from the entire decline off the 2014 highs, and momentum is able to close above 70, there is really nothing to do besides be long. Okay, and that's what I'll be looking for into the weekly close. What do I do right here and now? It's very difficult for me to justify jumping into a long at these levels. Again, this is on the back of a 5-week advance, very similar to the index. Momentum is testing right into the 70 threshold. So if we're going to get some sort of pullback, if there's not enough momentum to get this through, this would be the area of which you'd start to look for it. And it just looks vulnerable to me. Okay, so we try to drill. This is the weekly chart. Obviously, this is still in a constructive, broader outlook. We're testing, basic near-term resistance, but within the confines of the uptrend. And a pullback would get us back an opportunity to get long. Eventually, looking for a topside break here. 200-day moving average comes in at 143, 145, yada yada. But first things first, this has me concerned. Pound on the daily. You start to look for, okay, well, where is there a reactionary point where this thing looks vulnerable, right? Momentum on the daily chart has been overbought condition. We've been talking that. We very rarely fight that type of stance because this is when the market has the most push behind it. And the levels that we highlighted last week, of which we were interested for exhaustion, 38, 38.43, and 38.78, every day we just tried to push and pushed higher. I was interested in a short exposure off this to play the pullback, opportunity to get back long again. Markets had something different in mind. So where do we go from here? Well, 140 is not just a big figure. It ends up being actually a swing low that you made back here in April of 2016. And it's a pivot zone in and of its own, in its own right, Break of support. The break obviously on the Brexit saw acceleration. Maybe it's worth a little bit of a kickback here, but not enough for me to be in a conviction short yet. Okay. So the intraday chart that we highlighted earlier in the week, here's what it'll look like on the weekly open, right? That was Friday's high, 39.43. My concern was if we cracked that this thing was just going to see continuation right up into 141.22, which is the next upside target. That's the 1618 from the advance off the lows in November. But, things don't always pan out that way. You saw a topside break, momentum the entire time that break was happening, unable to clear 70. So that means inherently every subsequent high that you made in price was marking divergence in momentum. So what do you do on a breakout like that, where price is breaking to fresh highs, but momentum is really giving you lackluster at best type of confidence? Again, it's the pound. It's a notoriously professionally traded market, and these things could easily, or rather, they're well known for the throwovers of resistance, false breaks of support, and such. So don't necessarily have a play on it, but if you had to pull a gun to my head, I'd still think you get exhaustion pullback near 38.40. That's the weekly opening range low objectively. That would be your break point. I'm going to dump this 138 level at this point. Okay, that's the last ditch for me. If we get below that, you think correction, ultimately to buy within the confines of the broader uptrend. But for me, there's really nowhere to take a responsible stop on a long here. So real near term, threat is lower. Medium term, looking to see if we get a kickback to get back long. And again, ultimately 141.22 is the next upside level. Any questions on sterling? I know Jamie's working with a slightly different slope, and he also has this at resistance as well. So see if we can't get this kick lower in pound, at least to reset this. Just been an extraordinary run up. Again, clear monthly opening range break on the 12th, very similar to what we were looking at with pound CAD. Has this been late week or late month high that's registering? We'll see. Okay, so that said, let's segue number 5 into pound Kiwi. Here's what pound Kiwi looks like, Peter. So the only thing that kind of looked clear to me, and I don't think I have a weekly chart on this setup. Well, that could be it. This is what we were following since last year. Actually, I haven't looked at it, but it still looks pretty decent. Median line, a little messy, but the 50 line caught the upper parallel. The downside break, you saw the 50 line hold again. The close below has us lower, and using that 50 line again as resistance over the last 2 weeks. So, nothing really since the start of the year here to write home about as something major on the weekly charts. But let's see. And again, similar. Structural breakout last year. Okay, here's pound Kiwi on the daily. Okay, so Peter, the close high for the year comes in at 91.23. I think that's kind of where we capped out yesterday. What was the high? 91.23.8. So, okay, we literally came right into the yearly high close. Yeah, the 50 line just above that for this formation. This formation, by the way, I don't want to put too much emphasis on. It hasn't really offered too much. There was a pivot on both sides of the lower parallel, which is the only reason I kept it. And then the 50 line here converged on that close. So it was actually a decent region of resistance. You're seeing a reversal daily candle here today. And we're now checking monthly open support. If we get through that again, it would be near-term bearish. Also note that the momentum signature essentially turning here at 50. Not the most constructive, but you see what this looks like close near term. Okay, so this is your high close for the year. mountain divergence into this high. And this is a objective. It would be an objective break of the weekly opening range. So near term on this, Pete, if we break below the objective weekly lows, the opening range low that was set on a Monday, Tuesday stretch here, that would put you in a near term bearish stance, but I wouldn't get too comfortable. Let me just give me 1 sec. Let me stoke this out real quick. Okay, so take last week's high. That's kind of, I'd drop, wouldn't want to fight it if it broke 90.87, 90.88. And so this is a 60-minute chart, Pete. So if you kick this out in time, the convergence of that same level that I was looking at here at that 38.2 retracement, that gets kicked out to the 25th. So you're basically talking about a Thursday, Friday low. Now that would make a lot of sense, actually, Pete, with the weekly opening range break statistics. So if we were to break this weekly low either today or tomorrow, looking for a Thursday, Friday low, that target would be somewhere around the 89.30 threshold. You got a decent pivot there, the median line for the current decline, and more importantly, the broader slope. That 50 line also converges right there. But I wouldn't want to take any part on this if we cleared 190.88, 190.90. So weekly opening range is pretty clear cut, pretty clear and well defined. A downside break is ultimately favored. How to trade it? If we get back near structural resistance to stop against that high. If we break lower on from here, I wouldn't go chasing it, but certainly you'd be looking to fade rallies towards 189.30. Pete, does that make sense? Again, your contingent here is, or your contingent for this move to kind of pan out, given either Kiwi strength or pound weakness, right? So pound, we talked about it. It looks precarious, could pull back. That could help. Kiwi, though, and I'll just segue real quick into Kiwi dollar from here. So Pete, if you have any questions on pound Kiwi, feel free to let me know. He says, yes, thanks. You got it. That was number 6. Here's number 7 is Kiwi. I just don't know what to do with this. So it's very, I don't want to say very, but it is similar to what's going on in Aussie dollar. I just, I don't know how to play it. I don't know how to play it. I'm still looking for some sort of structural resistance I can point to. You got the daily high day close from back here in September. I was looking at that yesterday, but I mean, too clean for that to be just it. We're still in overbought condition. Yeah, you marked some divergence on the high, but this thing has just been plowing higher ever since. I mean, this thing is ridiculous. You're talking about nearly 8.5% to the upside. So, we thought we had resistance here. We thought we had resistance here. Hell, we thought we had resistance right here, and that actually held for like 3 weeks, 3 days rather, 4 days. So I'm not going to fight this until we get a clear-cut reversal pattern. I don't think we have that here. Peter, that's my only concern. with the pound Kiwi trade is, if that thing is to move lower, you'd need some continued upward strength or at least support in Kiwi, or at least that would help us get more conviction on it. Other than that, you would kind of hope that at least in the near term, pound losses would outpace us and give us that pullback we want in pound key. So that's sort of the picture here that I'm looking at least with the with Kiwi dollar. Ideally, failure is somewhere a little bit higher near 73, 75 is what I was looking for. You have structural resistance, or at least the upper slope here. The slope hasn't been the cleanest necessarily, but more or less, it's been able to identify some decent breakouts and pivots. So converges on a pretty basic 764 retracement. Note to the left, if you follow my cursor, there is also the initial 2017 opening range highs and the swing highs that we made back in February of last year. So a good spot. Haven't quite reached into it. So for me, it's a waiting game here on pound or on Kiwi rather to see if we do get some sort of near-term failure in price. Any questions on Kiwi dollar? Okay, that's number 7. Number 8, let's move on to dollar yen. Moving back towards support, yen is one of the strongest performers versus the greenback today heading to the U.S. session, as I noted. Remember yesterday we talked about this descending pattern. This is also the formation that we were following over in the intraday charts. Here's what it looked like just at the open of the week. So 111.12 was really the level that we marked as the breakout level to give us a little bit more of a corrective stance on this thing, looking for 11.65. We didn't get it. We actually probed right into it. You could see that the high came right into the median line, held like a charm. On the secondary approach yesterday, last night on the approach again, right into that region before pulling back. And it looks like we just made it through the weekly opening range lows. So look, 110.15, 110.23, that's still the appetite here for the initial move lower. That was the level that we were targeting on the initial decline earlier in the month. And there's still stuff to worry about there. The daily chart, basic slope, resistance off that late November high, or actually this is the December high. That same parallel extending off the lows from November, caught the lows here. That slope also still converges on 115, 110.15, 110.22. So you're still looking at that as a near-term support target, but if you're holding shorts, take a little bit off, bring your stops to break even. Next downside level, 189.85, 109.85, excuse me, not too far off. And that would complete 2 equal legs down off the high. Boom, boom, boom. And it'll be your next downside target. You can see the next confluence region of support. Here's slope resistance, a parallel off that low that we made back in October of last year. Almost got that tag there. Converges on a former swing low, 109.54. So the levels are pretty clear. I just wanted to highlight this 110.15, 110.23. That's still support. That's still support. The levels are clear on what to do beyond that. But in my humble opinion, that's still support. Questions on the abomination? Going once. Going twice. It's number 8. Okay, last but not least, we'll hit dollar Swiss. We'll touch on dollar CAD real quick, and then we'll look at what crude prices are doing. But for Swissy, there's really a whole lot of nada to do. Here's what dollar Swiss looks like. We've been talking about this range since the start of the week. So really no change to any of the Swissy levels. Here's where we started the week. That's what we noted as resistance. And we've just been opening the weekly opening range right below that. That's all we're doing. We came right into that. We've been holding this range ever since. So It is my humble opinion, again, that you get some sort of corrective breach higher before you move lower. I'd love a stretch into 95.50s, 96.50s, excuse me, 96.70s for possible exposure again for the short side. But just that reversal day that we made off of a nice critical support confluence here, three-way support confluence, was pretty nice. And although we're testing near-term resistance, you got a pretty clear-cut weekly opening range. If the dollar rebound or the dollar recovery materializes, look for that upside stretch. Ultimately, we'd be looking to sell near the upper parallel. A downside break of the weekly opening range, you still have to contend with 95.50 and 95.48. And 94.84, excuse me, 94.86, this region right here. So kind of boring to start the week, but the formations are holding and the levels are clean. So once we get this thing starting to move, once vols start to pick up a little bit, I think you'll get a run on this one and offer a nice opportunity. Dollar Swiss, I know I haven't written it. I don't typically follow it very closely, but when it's clean, it's clean. Okay, last but not least, the dollar crosses. Here's number 10 and the loonie. Very similar to dollar Swiss in that it just hasn't been able to do much. Working on the assumption again that here you get another just near-term rebound, but for the loonie, it's just a very wide but very well-defined monthly opening range. Here's your monthly open. So not only is the monthly opening range highs at the monthly open, it also converges right on the 100-day moving average. So you know exactly where this thing needs to max out. From a Fibonacci standpoint, you even have a confluence there. That's 126 into 125.90. Okay, this region right here. So that's the level you'd need to clear to validate a longer term recovery in dollar CAD. Not necessarily our favorite play, but just highlighting this is a range trade, plain and simple. Plain and simple. We tried to give this some color yesterday and threw on this pitchfork of which we didn't have much conviction on. So I don't really want to stress it just yet, but the median line further highlights that same region if we get up there at 26. Bottom line, or ultimately, downside break of 23.88, you're really looking for 22 and change, 22.50 as sort of an initial target on a dollar CAD break lower. Questions on dollar CAD? Still think the risk is for a near-term recovery here before you turn over. Last but not least, crude prices. So it was super clean with the reversal off key resistance, which was 64.78. That was a level that we had pinpointed on the daily charts. Heck, even on the weekly charts, it was, you know, as clean as you could possibly get as far as oil is concerned. Okay, for a level to which to look for some possible exhaustion. You had a big old 4-week consecutive ripperoo. It was actually technically it was a 5-week rally here, but really nice slope resistance. 100% extension, so 2 equal legs off that low from 2016, and just a really nice level of confluence resistance. You got a nice reversal weekly candle there. The pullback not quite giving us the extension I would have liked to see. Ideally, in a perfect world, you pull back to the 50 line or even this 60 threshold, and then you bounce. But the focus has been for us is that the upside is at risk, basically while below this threshold. And again, I can't stress this enough, guys, these little subtleties in how we approach things. When things are at uptrend resistance, you want to be soft on playing the pullback, and you want that pullback to offer better entries on the long side. Whereas opposed to if you're at downtrend resistance, that's when you start to load up, right? Because the ultimate trade is still down and you're at resistance. If we're going to get resumption, this is a good point to come in. This is not that. This is the exact opposite, the previous one that I spoke about. We're at uptrend resistance. So really nimble, the risk is lower. Ultimately, if we dip lower, you want to look to buy that. But the weekly charts have really been our key guidance here, and they've continued to pan out pretty well. So crude on the weekly chart looks like this. Daily chart, further highlighted that region with a near-term slope just off the lows they made in October of last year. One touch, two touch, so it's not all that big, but two touch right here on the parallel. Again, also converged on 64.78. So the pullback, again, not so much steam, but daily momentum has sunk below 70 again. So if it holds here, look for a final drop. Ultimately, I think you look to buy that in crude, but still thinking exhaustion here. Still thinking exhaustion. Here's the near-term charts on crude. So the play last week, or the play that we were following here on SB, was the move from 64.78 rather into 63.20. That was the measured objective move of the consolidation break, right? We had the triangle breakout. That target was right there. That, once broken, was support, and it converged on the lower parallel for this near-term embedded channel. So even within the confines of the channel that we were looking at on the daily chart, the near-term channel also converged there. So, what do you do with that? It looked like a break at first. We said that 62.56 was our bullish inval. We never got to that level, so we couldn't really, start to get confident on really pressing the shorts. And here we are again in that range. Could pop right back up into this resistance level, but the same game plan exists. Okay, while below 64.78, the risk I still think is for a possible near-term exhaustion here. So can't get comfortable in any fresh new longs from here. And if you do play the pullback, be nimble. 62.56 would be the break that would put me a little bit more comfortable, but I'd only be targeting like 61.07 or 61, 60 being the last target, maybe a quarter of the trade left to get us into that level. If we get the breakdown, But right now, as it stands, you're simply at uptrend resistance again. Or you're approaching uptrend resistance again. Questions on crude prices. That is number 11. I didn't get to go over yesterday in the webinar Bitcoin, and it's not something again that at this point is going to be super interesting. We'll have to bring this into the logarithmic or log scale here, but the levels have been pretty clean. Here's what the daily chart looked like last week. We presented this. We talked about the consolidation break to the downside. The measured move there gives you 87.28, 86.43 as sort of where you'd look for an objective target. So you have some room still. In fact, former trendline resistance, once broken, became support. Again, once broken, became resistance. So you'd still think that you'd get another move lower towards 83.54, 86.40 is the range of support I personally would be interested in seeing a little bit more of a supportive, constructive hold here for Bitcoin. Till then, I still think the risk is lower. Here's what it looks like on the intraday. Okay, so we were following this median line formation here. We highlighted last week this confluence region, 618 retracement of the advance off the lows they made in 2017 here on September. That 618 retracement converged right on the lower median line parallel of this modified pitchfork. And again, charged a nice bounce right back to that 618, nice pivot. So even if we were to launch higher near term, I'd be looking for short entries here. Bearish invalidation would be 13,074. If we break back above that, something else is up. But for me, near term, basically still bearish below 1,200 or 12,000. Any questions on cryptos? All right. Well, if there are no other questions from you guys, we can wrap it up here. Don't forget, Jamie will be up on tap with his midweek strategy webinar shortly, and I will be right back on board tomorrow to wrap things up. Or wait a minute, tomorrow's Wednesday. To give you, today is Tuesday. I'm sorry. Jamie will be on board tomorrow. Geez, trying to fast forward through the week too quick, guys. I will see you guys tomorrow morning, same time, same channel. Midweek strategy webinar is still scheduled for Wednesday. Till then, best of luck trading. Again, BOJ is going to sneak up on us, and then we don't have the ECB until later, but the BOJ is kind of be the next thing in sort of focus here. So keep your eyes on those yen crosses that we've been talking about. Puja, I know that you've been looking at Euro Yen. Remember that not only made a very clean week monthly opening range break, but it continues to hold this weekly range that we've been in since the last or since the start of the week. We've still been sitting in that range between 36.20 and 35.20. Look for a break of that here near term. But the yen crosses in general are going to be a great focus, and specifically dollar yen, which we talked about earlier in the session, is right into that key support barrier again. So watch for a reaction there on the BOJ. All right, guys, best luck trading. I'll see you tomorrow. Cheers.